Test. All right, welcome everybody. Today is April 25th, 2025. I am actually recording this a bit after the cash close on Friday. Apologies for not being at the live session this week. I had some family things that popped up. But without further ado, figured I'd hop on here. It's been an interesting week. And to end off basically the end of April, right? And so let me kind of make an introduction. So my name is Spencer Riegle. I am the Chief Crypto Options Trader and Strategist here at DARMA Capital Trading. You can follow me on X at _RIEGLE. I am fairly active there, or LinkedIn at Spencer Riegle, so just my name. Couple disclosures before we get it kicked off is all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, right? And so each week we get on here and we talk with everybody here in at Bookmap in the Discord, and then for those folks that are kind of watching the recording as well on YouTube, we talk about risk taking and risk mitigation techniques, right? And so always we start each session with talking about risk capital. So if you're stepping onto the desk and you're trading with money that you need to use to pay bills at the end of the week, end of the month, or groceries you need to buy on the end of the week or the start of the next week, that's not risk capital, right? Risk capital is capital in which you're willing to lose. And then we will talk about how to go through some ideas and some techniques that are used typically when approaching risk, right? And so anything that is going to impact your life is not risk capital and should not be used. So each session we kind of like to start off with that. And then we actually have a bit of house cleaning to do this week. So for those of you that are in the Discord, there's a bit of a new verification process with Bookmap. And so you can go through the whole verification process and you should be able to see it within the Discord. So just register your email there. And if you're not in the Discord and you're watching this on YouTube, I highly recommend getting in the Discord. I am in there every day and answering questions if anybody's having questions. I rarely get on YouTube to answer the questions. So the best place to get kind of the fastest responses are always going to be within the Discord, right? And so you can find me specifically within the DARMA Capital Trading server, channel under the Bookmap server, right? So you can see to get into the Discord over here, Discord /Bookmap, right? Next, Next, always start off each session with the website. So we launched our website this year. We're fairly excited about it. And so we keep adding things to it weekly. Just added some stuff to it last night, which is great. But if you have any questions about who we are, what we do, it's all laid out here on the website. If you have any criticism, anything in which you'd like to share about the website, feel free to let us know in the Discord as well. We also have a free education suite, which you can do via signing up, and you can head over to the trader assessment and education. Just go through register process, right? Put in your email, put in some basic understanding of who you are. And then we like to do a trader assessment, right? And so we kind of see traders as a full barrage of categories. So that helps us understand who you are and what might work best for your style of trading, right? Some traders are fully systems, some are discretionary, some are a bit of hybrid. There's a lot of different things that go into it, right? So it's fully free. Check it out and let us know. All right, let's kind of get into it. So for those that those that are unfamiliar with how we kind of run the sessions, we take a top-down approach to markets, and we start off with kind of the macro events. So what's kind of happened in the last 7 days. It's been about a little bit less than that. So around 10 days since we last hopped on. And for anybody that is trading post Trump admin, as always, there is something in the news that is happening, right? And so we start macro, then we dive into a bit of a weekly outlook, and we're actually going to lean on some roughly 10-day outlook to kind of round it off, and then we'll get into some strategy. So we'll keep it kind of short this week, and then next week is Let's see, when does the first of the month? First of the month is next Thursday. Yeah, so we'll cover kind of the end of the month here, and what to kind of look for as we head into May. So macro events, let's talk about them. There is a few, and so since we kind of talked last, it was the escalating tariff wars, right, that were continuing. It was tit for tat with China. Obviously, that is incredibly disruptive to business cycle or business generally and globally. And so that's kind of the front and center news from what we were seeing. Then we started to sell off as over the weekend, last weekend, Trump was getting fairly aggressive in terms of threatening Powell, right? That is the U.S. Fed chair, Jerome Powell, and he makes decisions on rates to help with monetary policy, right? And so what does that mean? There was large concern within the belief in investing in the U.S., and so we saw the bond market continuing to be incredibly volatile. The dollar index was also volatile and has been very volatile. And so what we were seeing was a trade out of basically a correlation to U.S. dollars, right? And so that created a bid in gold to start the week. And let me pull up a chart of gold to see where we're ending it off on the week. Slightly down from mid-session earlier this week. But so there was a bid in Bitcoin that was fairly apparent. That bid spilled over into Ethereum, right? A lesser, but still nonetheless, it was it supported the whole crypto market as well. And then you were seeing it elsewhere, right? Equities sold off to start the week, right? And then we'll get into the next headline. So as we started the week, equity sold off, and then all of a sudden Trump kind of takes a step back on some of the interviews and says, look, the Chinese tariffs are not going to be 145% that were proposed. They're going to be much less, but they'll likely still be, right? And so the market rallied on that news. And then beyond that, then he took a 180 turn on kind of his threats towards Powell, and kind of back down from that to rhetoric and that stance, right? And so since then, we've seen a rally in equities. We've seen a macro bid continue in Bitcoin, right? Bitcoin started the week positive on some of these broader-based negative headlines that were impacting risk. And it seems as if we ended off the week with the narrative continuing, right? And so as we go forward and we go into the weekend, obviously a monitoring of those headline risks and what is to come is going to be important. It seems as if headlines and volatility is going to be here to stay, and that's basically just how impactful how impactful any narrative from the Trump admin is currently, right? And so as we think about our strategy and as we think about our updates, we need to keep that in the back of our mind that all of this can change at basically a Truth Social post, right? All right, so let's kind of pull up an outlook and see where we're at and see where we finished on the week. I have a bit of a different outlook for those that are used to kind of my normal screen. So normally we go through a weekly outlook, and that's because we have the shows on Tuesday. Well, today is Friday, so it's kind of towards the end of the week. So I figured I'd show you guys the monthly as well. And we have a ton of different durations in which we use to kind of get a better understanding of where price is on a daily, weekly, monthly, quarterly, yearly outlook, right? And so if you have any questions about that, feel free to ask. However, let's kind of run through. So we're going to tomorrow is what we see to be the end of the week for crypto. And so we're actually going to start to lean on the monthly. And the monthly here, let's kind of pull up Bitcoin and blow it up so we can see it on the recording. Yeah, so there you go. All right, so on the left is what we have is our price map, right? And price map is our quantitative and qualitative data that we use to understand markets, and it's basically just a risk overlay, right? For those that are familiar with the stream, we get on and we talk about a couple things to start the session, right? And so we always start with the directional. And so because we're looking at the monthly, this actually rolled out at April 1st. So this is towards the latter half of the month. This is towards the latter half of the month, and so we have about a week left, but we get new weekly data starting tomorrow night, 7 p.m. Chicago, right? So around 0 UTC, every Saturday we see the start of the new week and the close of the previous week. So let's take a look. For Bitcoin in particular, and you can see that I have Bookmap up on the right, which is going to be really interesting. We are at, and we closed at a very important level on kind of a larger time frame outside of just kind of the monthly. So if you kind of zoom out here, and we'll see after Jan 20, right? You have all of January, Jan 20, boom, all of a sudden, and then we started to see declines in broader base markets, and we have this recent high over here, right, that we're kind of looking at, which is right around 94.5, and we continue to hold over that. But it's specifically in terms of price map, where are we lining up? 95,600 is a level in which we need to base over for this continuation to happen through the end of the month. If Bitcoin cannot do it, there's a good reason to believe that we're going to really just fall into a digestive but positive trade within this broader range here, right? So 95,600 is kind of that upper level. So why is this a key figure? A couple things. One, previous month's high is right here. We just closed the week. Cash close here in U.S. equities. We just closed the cash. The cash close at the previous month's high, psychological level, right? So fundamentally, we are over last month's high. And the market's either going to extend or it's not. Plain and simple. Another thing is, this is what we see to be a UP breakout basis the monthly. For that to validate, which means an extension targeting 100,000, 99,999, it needs to breach this dashed pink line up here, right? As we think about strategy, we never want to be buying breakouts. We want to be anticipating breakouts, and we don't want to be leaning into what we think will be a breakout and leaning into what we think will be a reversal, right? So why? Reason for that is when you're leaning into something, you usually have better risk reward, right? If you're looking to validate here, right, and you buy here, and essentially your risk is down here, it's better to buy early and sell early, right? There's less risk there. So when we see this, anything that's over the previous month's high is positive, right? And so we're over that. The next hurdle here on this tight range, the market's going to be fairly tight in terms of the expectation for the next few sessions. If we can base over 95,600, that's positive. That opens the door for a potential rotation to 100,000. If we can't do that, and let's say we just closed, cash close here on a Friday, let's say we fall back and we trade under the previous month's high, we can't really get it going, and then we just kind of fail here. Well, that's not really a reason to get incredibly excited. It's more of a reason to step off the risk, step off the leverage, and say, I'm waiting for the market to kind of prove to me that it has the ability to continue to scale, right? This has been, this month, from the lows, basically a 75 to a 95 trade. That's a fairly significant range on the month, right? For that case, it absolutely can stall here and does not need to scale higher, right? If it breaks under that 95,000 area, the expectation it goes right back down to 91, right? We just kind of chop around here. If we can hold the 91 and a quarter, chopping around is fairly normal, but constructive and positive, right? Because we're not breaking right back down. And if you kind of scroll out here, any time in which we've scaled over the last few months, we've broken right back down. Scale, break, scale, break, scale, break, right? Scale, base, scale. Now we're at a decision. 95 either holds or it doesn't, right? Why is this also an interesting level? It aligns great with Bookmap, right? So there's resting liquidity that continues to sit here at 96, 96.2, 96.3, 96.5, 96.800, essentially continuing right up into this area in which aligns perfectly with what we're talking about, right? Liquidity bands oftentimes act as magnets, right? So if we come up here and test them but can't break through them, it's more of a reason to lay off the risk into this area, knowing that if we can't break out of here, the likelihood is we fail from here, right? And if we fail from there, where are we going to go? Well, we start here, and then what if, right? That's always, trading's always a game of what if. So you always want to be selling early and rebuying lower versus kind of just waiting around, right? And so resting liquidity is sitting up there on the offer. On the bid, there's not much. That's kind of just sitting here in the book. And so keep an eye out. But as we kind of go through the next week, two key figures to look at: 95,600, 95,000 creates basically this very tight range of risk. If we can base over 95,000, it is basically a caution light that says there's a potential possibility for a trade to 100, right? Where does that start to get validated? Over 96.5, right? So getting in early makes the most sense. At 95.41, your risk is basically $41. If you get in at 96.5, you have $1,000 risk. There's a large difference there. So that's how we are thinking about it as we head into the end of the month, specifically in Bitcoin. For Ethereum, let's take a look at Ethereum. Ethereum has underperformed largely for the better part of last year and this year. And so we're looking at a tough trade, right? However, what are some key macro things to look at on the horizon? The Petra upgrade, right? And so the Ethereum community is looking to make a stride positively and ship an upgrade out, right? And so there's a lot of kind of hesitation around how fast the community can ship. So having a shipment of the Petra upgrade, whether it be massive or not, is positive, right? And so a base here over the previous month's low to the previous month's close. Again, that's kind of the tight range that we're looking at that correlates with Bitcoin. Under the previous month's low, no reason to really get bullish. More likely to fall into a digestive trade. If we continue to base over the previous month's low, next level that to really look at is 1825. that's your previous month's close, right? So basically a red to green on the monthly. And if we go there, 1900 is likely. More than likely, as we talk about with the directional is kind of that pivot, right? The over it's positive, under it's negative. If we can go over 1900, we can really quickly move to 2000, and we can do that in a couple sessions, right? And a lot of times people forget about how quickly Ethereum can move, because a lot of the time it does sit around doing limited to nothing. But when it does move, it moves in a significant way, right? And so to start this week, we traded from essentially from the lows down to 1550 all the way up to 1800. That is a very large range for the week. And a base here is positive, very constructive, and it needs to be respected until it's disproven. On Bookmap, if we kind of scale out and look at some of the resting liquidity, we have some resting liquidity around that 1820 area, which is exactly today's highs, but also exactly what we're talking about, right? So previous month's low, previous month's close just creates this tight range. As long as we can base here and hold here, it creates what is considered to be coiling action. The market tightens up and then it can extend, right? And so that would be positive if we hold over 1750. So 1750 to 1825 is the range for now. 1825, a bit over 1825 that can hold, is green light, right? And so a green light targets 1909 and then 2081, right, for the remainder of April. So those are some quick outlooks on the week, and we'll kind of keep it short. Just wanted to hop on and make sure that we did cover it this week. So because the markets have been incredibly active and they likely remain active, probably for the foreseeable future, right? So if you have any questions, you're watching the recording, I'm going to try to get this uploaded as fast as I possibly can. Feel free to reach out in the Discord. That's the best place to do it. Go through the verification process. It's free, so might as well, right? Enjoy the weekend, and I will catch you guys all on Monday.